Great. Thank you so much, Vasily, and good morning, good afternoon to all of you. While Majid pulls up the presentation, I'll just do a couple of quick introductory comments. First of all, thank you to Vasily. For you who don't know him, as he mentioned, we started a couple of years ago, worked with him on the EU Horizon 2020 FinTech Risk Management project. And he's a really engaged thought leader, and we're very happy to be here at his request in this seminar, because even after that European Union project has ended, he's continued working on FinTech and risk management issues in the European context, in the broader context. And I also just want to mention, Vasily, you're very modest in not saying that, but he has his own YouTube channel where he posts really interesting short videos, interviews with thought leaders in the realm of FinTech and risk management. Maybe you want to share that link in the chat. People can see interviews with you on topics of artificial intelligence, machine learning, DLT, etc., with academics, fintechs, and policymakers alike. So just to mention it there. Now, as Vasily mentioned, we have a lot of ground to cover, so bear with me if I'm going a little bit faster, because we really want to be able to share everything with you. The topic is FinTech risk management of central banks, including those that are financial supervisors, including links with cybersecurity. Now, the reason why we wanted to share findings from our IMF paper with you is that we see that there's an increasing demand from central banks all over the world for IMF, what we call technical assistance in these areas. We've always provided TA on central bank risk management to central banks over the past decades, but we see that now with the advent of FinTech related issues, especially also in the CBDC, central bank digital currency realm, the central banks are requesting that TA from a perspective of the projects that they're working on, because they want to cover those new risks, those increased risks even more clearly. We've provided TA, Majid and I, to all regions of the world, to central banks, often with expert help from other central bank staff. And recent missions included also staff from the Bank of Portugal, Central Bank of Ireland, National Bank of Georgia, and the Bank of England, who've been very helpful and very kind to share their expertise with us as we provide assistance to those other central banks. Now, for today, and I don't know, Majid, is the presentation on screen?
Yes, it is. Can you see the screen? Can you see the overview right now?
Okay, I think I've got it. Yeah, perfect. Thank you so much.
Thanks.
So for the outline today, we have a funneled approach. We'll start quite broadly, briefly, with the changing landscapes for central banks. What situation do central banks find themselves in when they deal with FinTech and cyber issues? We'll then move on to general FinTech developments, where Majid will give a very concise overview of key FinTech developments. He will then zoom in on digital transformation risks in particular, and then we'll apply that to the world of central banks themselves. So really zoom in. We will also cover the related area of cybersecurity. Now, as all of you know, cybersecurity is actually a completely different topic. But in the case of risk management, both topics, FinTech in general, cybersecurity in specific, are closely related, because this new technology often brings new or changed cyber risks. So that's why we deal with them together in this presentation and in our paper. Finally, we'll address how to go forward, a summary, and the very concise one-slide recommendations from our paper to central bankers and financial supervisors. As Vasily said, please paste your questions in the chat. If they're relevant immediately to the topic that we're discussing, we might integrate them. Otherwise, we'll get to them at the Q&A in the end. We'll also be sharing our details at the end, so you can always reach out to us directly. With that, I think, Majid, you're up for the specific overview. No, sorry, I'll go with the changing landscape. So here, I think it's very important to mention that central banks are not in a situation where FinTech is just affecting them as a standalone development. So it's very critical to kind of give a really brief one-slide overview to you on FinTech might be new, cybersecurity issues might be increasing, but this is not a standalone development. The central banking has been changing over the past decades, and it's been changing faster and faster and faster. I've written here on the left also already, as you probably know, central banks started out as monetary authorities focusing on price stability. That's not the only game in town anymore. financial stability before the global financial crisis already was on the rise as part of central bank mandates, financial integrity issues, AML/CFT, but also nowadays, open any newspaper and you see the issues of financial inclusion, climate change, gender diversity, growth and employment, and in that sense, a little bit more on the fiscal side, and fintech, of course. So with central banks being these kind of turning into these super institutions, public super institutions, whether you're in the African region, in the Middle East, or in Latin America, or in Europe, it doesn't matter. Central banks are key super policy institutions, more and more and more so. And the table on the right, the chart, which is from one of our papers and a recent technical assistance mission that we did, which is published to the Swedish central bank, already highlights that if you look at what central banks do, policy objectives, and how they do it, the instruments, you can see that the areas are starting to become more murky, more overlapping. And why is this relevant for the topic of today of fintech risk management? Because as those objectives and instruments are becoming more mixed, more commingled, so to say, there is a risk that when you apply fintech, some central banks might see it as an objective, others see it as a tool, but it's not necessarily clear what purpose that tool serves or which objectives that tool serves. And that's very important, as we'll see further ahead, because central banks need to first think, what am I using fintech for? What purposes does it serve? Does it fit in my legal mandate? Before you start delving deeper into exploring experiments or even policy options. Okay, so with that, I'll hand it over to Majid for fintech opportunities and challenges.
So thank you, Ashraf. Thank you, Vasily, and I'm excited to be here. Now, just to take a 10,000-foot view of some of the things that we saw when we were doing some technical assistance with countries and central banks. First of all, the opportunities and challenges. I wanted to highlight this a little bit and give a small example in terms of what central banks are facing in their exploration into fintech, into cloud computing solutions, into digital assets or central bank digital currency, and many more. One of the things that we wanted or sometimes we see central banks asking, and even the financial sector within these countries, is are central banks competing with some of the fintechs when they're coming up with some of the payment systems, the fast payment systems, or a central bank digital currency? And with that, we're looking at that possible competition or that question with fintech startups and big technology companies. But when we look at the central banks, they're actually so different in terms of their risk profile. They've gained their risk profile or their reputational throughout the decades. And now all of a sudden, there's a shift into digitalization that hasn't happened before at that scale for central banks, that is causing some issues, some gaps, some areas that are overlooked. Now, one of the things that we've seen, and we do profile countries when we come to speak with central banks, is definitely the political risk profile. This is very important, and this map on the right is just an example. There are different resources to look at the risk profile, the political risk profile for countries, and nations will be even better to assess their risk profile, because the attack actors are completely different when we're talking about central banks and when we're talking about nations, and even central bank digital currency. We're talking about much more at stake from foreign states, from hacktivists, and we will cover that a little bit in a couple of slides later. But when we look at the political risk profile and nations, we advise nations to look at that. We also look at some of the benchmarking that are out there that gives us some indication about the opportunities, the strengths that nation or that region has, and some of the challenges that they may face as well. So just the next slide is just an example. I took this as a random, I'm not picking on Ecuador, but I looked up a website. Was there a question? I heard someone speak.
I think you're good, Majid. Go ahead.
Okay, so I'm not picking on Ecuador. There was a website, randomly select a country. This is just an example. When you look at the ITU Cybersecurity Index, you see that the Ecuador ranks 19 out of 35 in the Americas regional. And 119 out of 182 countries. And this is a very recent study. Now, when we look at the scoring that the ITU performs, and again, I think nations are best suited to look at these and to really scale themselves and look at benchmarking, but it gives some indication on areas that may be a component where some difficulties will arise and some strengths will be there. In this very example, you see the cooperative measures. Cooperative measures, it means within the same country, the ability to look into cybersecurity specifically in terms of attacks, in terms of campaigns that are happening against either a sector within the country or the country itself, is scored very weak on the ITU scale. Again, it might be that the data is not accurate, but looking at these gives us some indication about the regional, the national challenges and strengths as well. And this is just an example, and I'm taking Ecuador as a random example. This is another example from the WEF 2019, the Global Competitiveness Report, and it focuses on some of the digitalization capabilities and readiness for some of these nations. Now, this is again Ecuador, and you look at the overall ranking is 90, but when we take a specific sector, when we're looking at skills, when we're looking at business dynamics, and you start to see where some of the areas the country is actually ranked a bit higher than the regional within that region, and in some areas ranks lower than the regional and the global as well. These gives us some indications, and it all translates into some of the challenges that we, when speaking with central banks, find actually tangible challenges in some areas. For example, with some of the central banks, we see that acquiring skills and finding skills are extremely difficult when it comes to cybersecurity and niche expertise in some of these areas. Now, I wanted to shift gears a little bit and start focusing on some of the digital transformation risks that are basically are challenges when we deal with systems. Now, any system that we produce are comprised of people, process, technology, frameworks, as well as data. Producing data. And we see on the right, there are a number of risks. They may overlap here, but I wanted to spell them out. Cybersecurity, and this talk is focused on cybersecurity, but digital risks and digital transformation risks are not just cybersecurity. Artificial intelligence, for example, has its own challenges when we're dealing with the black box problem to audit and to trace back a specific decision. In artificial intelligence, it's extremely difficult to define that and know why that decision has been made. Biases in the data that we use, or even sometimes the algorithm itself, if present, then basically it harms minorities, it harms some of the groups that we're trying actually to help with technology as well. Data and privacy. Data and privacy is a huge question and a huge risk when we're dealing with systems and producing data and storing data as well. We see many aspects of data security and data control, data and privacy controls that are put around systems so we can protect those in systems that are built. There are also digital exclusion and I think the pandemic has shown a lot of these issues with digital exclusion. When people started going back to work from home, there groups and minorities that didn't have internet connections, basically resulted in them not being able to work, and even their children not even able to participate in school at that point. Digital spillover, and we've seen this in I believe last year or the year before, the Target issue that happened in the payment system that took down a system for 10 hours, a very critical system. So the digital spillover as well, market concentration, the legal and regulatory aspects, a very important question when we're dealing with technology and innovation and advancement in digitalization. The regulatory frameworks and the legal has to be up to date and has to basically go hand in hand. But unfortunately we see that regulation and the legal around technology is a little bit behind. And environmental, the question of clean clouds and green clouds, and the question about blockchain, the proof of work that takes and consumes a lot of emissions. I think those questions has to also be answered when we're dealing with any digitalization advancement at a nation level and at a global level as well. Now, with this slide, I wanted to take a very quick brief history of the internet. We've seen Web 1.0, where basic HTML, basic internet, email and file sharing started in the 1996 to the 1999 and 2000s. But then we moved into Web 2.0, where we started seeing social media, blogs, dynamic HTML, videos, and then cloud computing came at that phase. And then we went into Web 3.0, where we see semantic web, blockchain, artificial intelligence being part of the internet, big data, open banking, of course, decentralization, which is the blockchain, what blockchain brought to us, and distributed computing, and of course DeFi, as we've seen this taking now a lot of innovation and happening in the field of decentralized finance. Now I want to take this slide and add one thing to show how cybersecurity in general globally is either catching up or not catching up. Now, in 2006, there was 19 million records leaked in the internet in 2006. Now, jumping to 2009, that number, and these are unique records, went up to 222 records. Now, fast forward to 2018, that number went to 446 million records. And these are very conservative numbers that we're trying to show here. And you can see that security is basically catching up in terms of the risks, in terms of the challenges. And you see where we see these numbers, as well as the monetary losses over the years has grown tremendously in the past couple of years. And there are different reasons, and we will cover those in the next couple of slides, but I'll take those in the next slides as well. Now, again, following the same problem of cybersecurity, I wanted to show this a slide, and I want to a little bit show you a number of issues that are taking place intentionally on different layers. Now, if we look at the slide, again, systems are technologies, people, processes, and data. But when we look at some of the breaches that have taken place, we quickly realize that it's not a specific layer or a human factor or a technology vulnerability, or it's actually different layers, different attack vectors, different attack surfaces that are failing at some level. Now, this contributes to the difficulty of security and the difficulty to actually secure a system. But just to give some examples, the Marriott example is one where a point of sale breach happened at a point of sale device in one of the resorts of Marriott. Attackers went into this device and then started propagating into the network of Marriott. It took them a number of years until they were discovered, until those attackers reached the crown jewels of the Marriott, the sensitive data, the databases that really had sensitive information. And you could see how that a point of sale, which, if you think about it as a point of entry, may be at a low risk, but propagating through the system was actually the issue that happened. It's a failure. It's a lot of failures in layers of protections that caused that, but malware was the entry point. Now, when we look at the misconfiguration at the Capital One